Welcome back to this week's market drama. Let's start with the S&P 500 was up 2.2% this past week. NASDAQ was actually up 4.7%. That tells you the higher growth or riskier part of the stock market rallied more. The S&P is actually up now 6.4% for the year. So really good start. And what is that in the back of? Well, we had better than expected fourth quarter GDP numbers, and we had inline inflation numbers. So let's go a little bit deeper into those. Core PCE was up 4.4% year over year. That's one of the core indicators that the Federal Reserve watches for inflation, and it was in line. It dropped from 4.7% in November to 4.4% in December. Fourth quarter GDP rose 2.9% for the quarter, slightly better than the expected number of 2.8. The mix of the growth wasn't great, right? The biggest drivers of that growth was government spending and inventories. But it's key here is that consumption hasn't collapsed, right? And if you're expecting a recession, usually is accompanied by consumption going into negative territory when it comes to growth. Why? Because consumption is 68% of GDP, right? So that combination of, hey, we might not see a recession, right? We might see a soft landing, yet inflation continues to drop, is why the markets are rallying. When it comes to what to look for next week, the Fed will announce if they're hiking interest rates by 25 basis points, 50 basis points, or half a percent, a quarter of a percent on Wednesday. Everything else is not as important as that. And not only will the market will be watching by how much they hike, and it's expected is going to be a quarter of a percent, but they're going to look at that press conference for signs of, is the Fed kind of signaling that they're almost done here raising, or what's expected going forward. As of now, what they have forecasted is that they're going to hike interest rates up to 5%. Right now they're 4.5%, which tells you that they would have this one that's coming up this coming week, and then one in May, and then they would just kind of hold for the rest of the year. The market saying, yeah, you're saying that, but we think it's probably going to go lower, right? The interest rates will actually go lower in the second half of the year. So there's still a bit of a disconnect, but that disconnect is definitely, the gap is closing as we get closer to the interest rates that the Fed was telling us they were going to raise. So a big week next week, and no doubt that will drive the market action this coming week. All right, that's it for market drama this week. Stay tuned for next week.